Okay, folks, welcome to our swing trade review of the iShares Sivler Trust, the SLV. We opened up a long position on the SLV on the 12th of January, and we closed it out on the 13th for about a 3% profit. A nice quick turnaround within 24 hours. And let's get to the chart. Let's go over the reasons why we entered the trade. And we'll do a review of some other symbols that are of interest right now as well. The GLD, GDX, USO, DBC. But let's wrap up the SLV first. Weekly chart. Now, what I'd like to point out and walk through first is the fact that we have the US dollar overlaid in green, because we need to appreciate where the dollar is trading, how it's trading, what's its trend when you're thinking about trading commodities, because they are priced in US dollars. For the longest time, you could see that SLV was in a trading range with a bias to the downside. It broke out in June, had a follow through, but then it rolled over and flashed a breakout point failure, meaning it broke out, rolled over, broke back down below key support, while the US dollar went on a tear. Now, what's most interesting is that here on the 3rd of November, the SLV bottomed out. But what did the US dollar continue to do? It rallied. And the SLV consolidated. In fact, it put in a W formation, or a double bottom setup. Here's the left side of your W, the center pivot point, the right side of your W, and here is the breakout above pivot. So a very bullish setup, and there's a divergence going on here. This traditionally is not supposed to happen, a rally in the face of the US dollar. So this told us that any rally in the SLV was probably going to be strong, a good short squeeze. So let's go to the daily chart. We'll come back to this for a review of the other symbols I mentioned as well, because there are other opportunities setting up. So fast forward to the daily chart. Here's our double bottom setup, pivot point at 1609. We pulled back and we rallied and formed a triangle formation. And we opened up our trade here, and we gapped higher the following day. Now, what had happened on the 13th was that we flashed a hollow candlestick, and that normally means that you're probably going to see a pullback. So we booked profits into strength, because the main concern is that in light of the rallying US dollar, would the rally in silver continue in spite of the fact that the US dollar was rallying? So it was a logical step to take that we would book profits into strength and move to the sidelines and see how it all plays out. Now what we're looking at is the US dollar maybe putting in a double top. Now, it's a short-term double top. I think that events over in Europe are unfolding rapidly, and that if we see a Greek exit out of the euro, that we could quite possibly see another move higher in the US dollar. That would not bode well for the precious metals or commodity names, or it shouldn't bode well. So we'll be looking to get long of SLV again. Friday was a very bullish day, and we'll be looking to add on strength. Now, where you're seeing other divergences set up, meaning the underlying commodity name is acting well despite the strength of the US dollar, is we're back to the weekly chart. Rather than look at SLV, let's skip to GLD. Gold. Take a look. You've had a nice rally, double bottom setup, higher lows, bottoming tails. Prior low 109.67, rallied up to 118.99, pulled back 112.32, and we broke out. Did the dollar rally? Yep. So we have gold and the dollar rallying together, which again is really not supposed to happen. It just goes to show you that there's an underlying demand for the commodity. This is a very bullish event. Now just imagine if the US dollar were to pull back, how strong gold would be. And gold, silver are outperforming the S&P 500 in 2015. Let's take a look at the GDX weekly chart. Beautiful double bottom setup. Again, traditionally there's an inverse correlation between the US dollar and the GDX, but as of right now, they are trading in tandem. You can even take a look at the GDXJ, which is the junior miners. Same thing, except here you had an undercut double bottom. Here we bottomed out in November, on November the 3rd, same thing as with silver, rallied, pulled back. We took out the lows, but then the traders came in and bid it back up. What they did is what they traditionally do. This is why I never use a static stop loss order. They saw a whole bunch of stop loss orders stacked below 2218. And what did they do? Because they're a greedy bunch, they sent down a whole bunch of sell market orders, blew out all of those stops, and then stepped in with buy market orders, and they took the GDXJ higher. And those buyers back here who thought they were sitting so safe never knew what hit them. So this is what I teach my members to avoid these traps. This is a double bottom setup, and we saw a subsequent rally. Where else are we seeing this type of behavior? Well, we're at the beginning stages of it, but I believe that oil has just formed its first key reversal, and it is doing so in spite of a stronger U.S. dollar. Last week, you saw strong institutional accumulation, as you did 2 weeks ago when we had another key reversal. So I think that we're putting in a bottom on the USO, and we at the Contrarian Trader are very constructive on oil and constructive on commodities. Let's take a look at the DBC, the DB Commodities Index tracking ETF. Weekly chart RSI is at 10.33. Note the bullish key reversal last week. You had a bullish key reversal the prior week. That's a sign of support, despite the fact that you have a rallying U.S. dollar. So this is how you make money in the market. You'll have hedge funds come on CNBC, on Bloomberg, and they'll talk down commodities when in the back end they're buying them up. They're buying them up cheap. Then the analyst community 6 months down the road, what will they do? They will issue buy orders. But it will be already too late. You would have already missed the train because the USO, the DBC, gold will have already rallied and the easy money would have already been made. So this is why we use stock charts. Never listen to the financial news media. Always watch the charts. And if you get any value out of these videos, please enter your email address. You get these videos in the future. We hate spam too. You will not be spammed. If you're watching this on YouTube, leave a comment below. Subscribe to my channel. If you're watching this on Stock Twitch or Twitter, follow me there. And everybody have a profitable trading week. I'll talk to you soon. Be well.